Hi, I'm Max Keiser. This is the Keiser Report. You know, if you show up to a gunfight with a knife, chances are you're going to have your guts ripped out. Shot dead in the street like a dog. Show up to a currency war with paper, like Mervyn King or Ben Bernanke or these other central bank clowns, and you will also be eviscerated, gunned down in the street by the gold vigilantes. And that's a good thing. Stacy?
Yes, Max. Over the past few weeks, we've seen the coming of the showdown at the OK currency corral, right? You've seen various things. You've seen wanted dead or alive, essentially, against the U.S. dollar right there in the middle of the poster.
Oh, that looks like Ben Bernanke! That looks like Ben Bernanke! Yes, wanted dead or alive. And I mean that metaphorically, of course. I would never suggest that central bankers would be gunned down and hunted down like dogs and ripped open and have their guts pulled out because of their profligate ways. I would never suggest that.
Now, in this past week leading up to the G20, we also had the G7. They were denying that there's a currency war. That, of course, you need an official denial in order to confirm that it is true. David Cameron was asked by some old codger in Prime Minister Questions Time about his experience. This old guy had lived through the Great Depression, and he said, it looks like with all this quantitative easing that we're actually trying to devalue the pound, but so is the yen, the Japanese yen in America. They're all devaluing our currencies. Now, I lived through the Great Depression and World War II, and that led to hot war. Because it became trade war, then hot war. And here's how David Cameron answered.
I think what he says is important. No one wants to see a string of competitive devaluations. Obviously, what happened to sterling as a result of the very deep recession here was a depreciation. I don't believe that you depreciate your way to growth, whatever country you are, but what you should do is use the benefit when there's a structural change to make sure you increase your competitiveness, and that is what Britain needs to do.
Well, financial illiteracy runs through number 10 Downing Street with David Cameron. You know, the central banks are caught serving two masters. They're printing trillions of dollars and yens and pounds. At the same time, central banks since 2009 have reversed a 40-year trend. They're buying massive amounts of gold. And these two things are not going to finish together. One is going to win, one is going to lose. And the gold market's saying the gold market's going to win. The bond market now in these countries looks as though it's hit the wall and is starting to fall apart.
And of course, he's lying there as if they could take advantage of devaluation. Everybody is doing it. Venezuela devalued recently by over 30%. In the UK, the pound sterling has fallen by over 10% against international currencies, and yet their export market is up barely 0.1%. So it hasn't worked for them. They showed up to a global currency war with their fiat paper, and it hasn't done anything for them.
Right. It's not going to work because you can't have any winners in a... It's like playing that rock, paper, scissors game with everyone has paper. You know, and they're just all showing paper, and of course none of them going to win, except those with rock, when in this case would be not a rock of cocaine like P. Diddy might have in this, but a rock of gold.
So there's the question asked, end currency war with a gold standard. This happened on Financial Times and on Bloomberg Television. They interviewed TCW Group's Komal Sri Kumar and Bank of New York Mellon's Michael Woolfolk. They were asked what the risks from currency war were and how to stop it. Now, Sri Kumar said that he thought the gold standard, if we brought the gold standard back, it would end this currency war. And it would be no different to how good it was, he said. He said it would be as good as it was during 1945 to 1971. We were on an international gold standard post-Bretton Woods. The U.S. dollar was backed by gold on international trade. And it was good times then. He said, quote, it worked. The world was in prosperity. There was economic growth. And there was clearly certainty in terms of what exchange rates were.
Well, we've never been off a gold standard. This experiment since 1971 of global fiat money trading against each other is failing. And we're going to go back to what was in place for thousands of years. A gold standard.
But But I also think it was 1971 when Nixon went off the gold standard. What it was the disarming of the population who had to work for a living. Because you could see that in the charts, because I thought, well, let's look at these charts again, because this guy Kumar says that this was a time of prosperity, and yet the propaganda you hear from the very working population, people who have to work for a living, they'll tell you, we can't go back to a gold standard because that's for the Rothschilds and the Rockefellers and the wealthy and the super uber wealthy. But look at these charts. This is the chart going back to 1945, and it shows you the blue line is the productivity increase in labor units. Red is the median household income. As you see, from exactly 1971, the median household lost their bargaining power, and all the productivity gains went to the top. They did not go to workers, and in fact, the median household wage went down once we broke from the gold standard, because they were disarmed.
Right. Since going off the gold standard, wealth has been accumulated by floating debt and by leverage. The average household will borrow 10 times their income to buy a house on a mortgage. And the rising asset value from the inflation this has caused will give the homeowner a sense of net worth appreciation. But the average bankster on Wall Street or the City of London can borrow 1,000 times their income. And they get paid based on that multi-hundred billion, trillion-dollar leverage that they're floating in the game. And over the past 20 to 30 years, or 40 years since going off the gold standard, this has meant hollowing out of the economy to the banksters and leaving the poor suckers who can only borrow 10 times their income high and dry because the asset values crashed. And of course, what's happening now is that private equity funds like BlackRock are buying out all the homeowners in America that went bankrupt during the last controlled demolition of the economy in 2008. Now those people are living like serfs in their own homes, paying rent to BlackRock. BlackRock, of course, you know, this guy Schwartz, who runs BlackRock, he's a terrorist, he's a financial terrorist, and of course he's terrorizing the people in America who are now suffering as a result.
So back to this chart here, that they lost their power, their negotiating power, because the parameters were being set by the people who were financializing the economy. So these guys own the paper world. And you decided, let's get rid of gold and I'll negotiate with these paper pushers. And of course you lose. Now, The Economist this week actually has a piece calling bankers unique in the world because it's quasi-Marxism, because they literally own the means of production. They own the means of printing the paper.
Right. There's no unit of labor that has any representation in this economy. And I've told people in the UK and I've told people in the US, people who work for a living, people who might be affiliated with unions like a Bill O'Reilly or a Rush Limbaugh, or the people like that who are part of unions in America.
Yes.
You know, they are union members, Rush Limbaugh and Bill O'Reilly.
Do you want to explain, you know, Rush Limbaugh and Bill O'Reilly are very extreme right-wing television hosts in America who spend their entire day condemning union members, only to, lo and behold, it's emerged on crooksandliars.com that, in fact, they are union members, and they're telling people, berating the unions.
Right, they're televangelists in America, and they are part of unions that they are decrying. They're self-hating union members. Now,
Yes.
but they're all like a cop or a teacher or a municipal worker who are part of unions. And I've been telling these people for years now to tie your wages to money supply. The money supply is up by billions. The money supply is up. The M2 is up 10, 20, 50%, 100%, 200%. You need to tie your wages to money supply, not the fabricated, nonsensical, quote-unquote, inflation number that is completely fabricated and has no representation in reality. And now, here in the U.S., Obama's talking about, well, let's raise the minimum wage, which is exactly equivalent to adjusting the monetary policy. If the Fed can move interest rates up and down on behalf of the banksters and make the economy completely artificial and remove supply and demand, remove free market economics and go to a planned, centrally controlled economy by adjusting the price of money, then the serfs need to be able to adjust the price of their minimum wage. Those two things would then balance each other out to some degree in this planned, centrally planned economy. But if the serfs can't adjust their wages tied to money supply, then you just have what we have now, which is a wholesale confiscation of wealth, an aggregation of wealth at the top 1% of the top 1%, and everyone else ending up like Greece, which are down there picking, seeds out of the rat poop to survive.
So again, we have a G20 meeting going on. People are talking about currency war. The finance ministers and global heads of state are talking about currency wars. Certain of these nations are accumulating gold, such as Russia and China, at rapid rates.
Well, they watch our show. I mean, Russia's buying gold. They're the biggest gold buyer in the world. Of course, this show is played in those countries where the IQ is high enough to stimulate people to buy gold, like Russia.
Now, one of the biggest banks in the world, a depository bank, is Bank of New York Mellon. And Michael Woolfolk was participating in this Bloomberg television debate with Kumar about the gold standard. And here is how Bank of New York Mellon's Michael Woolfolk responds. He says, if we went back to the gold standard, you would be looking at a global recession. We don't have enough gold, and it's not growing fast enough.
Well, this shows, Bank of Mellon, of course, and State Street Bank are involved in massive pensions scam, forex rigging, and fraud. And here's a man who represents fraud, who is making a fraudulent statement. There's something called price discovery in free market capitalism. According to supply and demand, if there's a high demand, the price goes up. But he's saying that we manage the supply and demand. We do manage wash trades to manipulate the price of gold and silver. We don't believe in free market capitalism. We envy the state of the Soviet Union. These people, they would love to live in a centrally planned communist nation where the state is basically controlling every single aspect of their lives. That's what this Americans, every single American is essentially planned Egypt, screaming to get out. Meanwhile, in Moscow, they're embracing the free market. They're embracing logic. They're buying gold because they're not jackasses like these American pinheads like Bill O'Reilly and Rush Limbaugh, who are self-hating unionists who don't even understand what supply and demand means. And that's why they're becoming extinct. Okay, forget about guns. We know that the guns will wipe out plenty of them, but they're just going extinct because they're stupid.
So finally, of course, you can't have a shootout at the OK Currency Corral without some bourbon or whiskey. Maker's Mark waters down as bourbon to meet rising demand. Maker's Mark just got a little less stiff. The bourbon brand, known for its bottles sealed with red wax, told customers today that it's reducing the amount of alcohol in the beverage by 3% in order to meet rising global demand.
This is stealth inflation again, like the horse meat scandal in the UK. So their prices are making their product is going up, but they can't pass the price rise to the customer. So they're watering down the product. And they're trying to justify it by saying that there's a high demand, so we're watering down the product. That's retarded. That's stupid. And people don't want to know why the economy is not growing, why they're suffering. It's because the people who are making these decisions are functional idiots.
They've shown up to a gunfight with a knife.
Oh my God. Well, Stacey Herbert, thanks so much for being on the Keiser Report.
Thank you, Max.
Stay tuned for the second half. We'll be speaking to Jan Scoyles of the Real Asset Company. Welcome back to the Keiser Report. I'm Max Keiser. Time now to turn to Jan Scoyles of the Real Asset Company. Jan, welcome back to the Keiser Report.
Thank you for having me.
All right, Jan Scoyles. In a statement this week, G7 finance ministers and central bankers insisted they remain committed to exchange rates driven by the market, not government policy. Do you believe them?
I don't particularly believe them. I think the statement that came out from the G7 was quite confusing for everyone because they basically said that they don't support people that are affecting their exchange rates individually. As a collective group, it was hinted that that might not be such a bad idea like they did back in 2009 with the G20, but they support it maybe in domestic monetary policy actions. So we all know that there's a currency war going on and we're heading that way, and devaluation of currencies is happening, whether it's openly happening or it's just happening individually. No statement can change the fact or what everyone can clearly see.
So yeah, there's a G20 meeting today. It seems like the G20 meeting coming after the G7 meeting. You've got the G7 are the debtors, and now they're going to meet with their creditors, and they're coming up with a plan to meet with the creditors, the Chinas and the Russias of the world who are financing the West, so to speak. What's going to be their plan?
Well, I think they're going to go with the same policy because I think they're trying to go in with a united front, aren't they? And Japan, who, this is all kind of started from, that this currency war was happening. And meanwhile, like you say, you've got the creditor nations in the G20, and we've had at least 3 or 4 years of those nations saying that these currencies are being devalued and, we want to see something being done, and the way the international currency system is being run is too dollar-centric, and it's not fair on them. Brazil said that a couple of years ago, and they're now bringing it back, that they'd like to see a more internationally diverse international system. So I think it'll be interesting to see what happens this weekend, but I don't think a huge amount is going to come out of it because, we need to, the G7 are too powerful to really want to change things at the moment.
Yeah, it's funny that because they're saying that talk of a currency war is damaging, and they don't seem to recognize that there is a currency war going on right now. So when are they going to realize that it's kind of like they're stumbling into World War I? World War I, people were kind of posturing, and then a shot was fired, and then there's a world war going on. So it seems like we're just waiting for that one moment. What do you think will be the trigger for this overt currency war to become obvious and unimpeachable? Will it be, which is the country that's most fragile, I guess you could say? Maybe Japan? What do you think?
Well, I think Japan's definitely the most interesting one, and it's particularly interesting because obviously the Americans aren't very happy what's going on. Japan's economic situation has changed quite dramatically in the past couple of years. They're now having to import energy, so they're trying to drive down their currencies. South Korea are now having to compete with them on exports, so the Japanese yen has been quite devalued against that. So I think Japan could be the turning point, but it's happening all over the world, and I don't particularly see a one trigger country, as it were. But I think there's a lot of room left for nations such as America, which has expanded their balance sheet hugely, the UK, which has done an even better job, 350%. I think there's still a long, long way for this to go before, like you say, we kind of head into the world war of currency wars.
Yeah, I'm listening to David Cameron on Prime Minister's Question Time ask questions about currency war. He doesn't seem to recognize that there is a currency war. He just says, well, it's good that the pound is down. He doesn't recognize the fact that it hasn't helped exports at all, and that he believes that the ongoing policies, the fiscal policies and the monetary policies are well within the remit of those in government, and we're going to see their way through this recession. But nothing he's doing is working. But more troubling is this seeming complete financial illiteracy. How did they get to be, to Osborne, Mervyn King? Mervyn King seems to be sounding the warning shots that what's really going on, but he's leaving, and Mark Carney's coming in to seemingly to just do, as a former Goldman Sachs guy, to do the bidding of the people who are in this massive denial. What are your thoughts?
I completely agree. There was quite an interesting article, I can't quite remember where I read it, maybe on Bloomberg, about how we're now seeing this new generation of central bankers. And not only are we seeing this new generation of central bankers, we're seeing this generation that aren't quite so bothered about being autonomous and independent in the way that they're going about things. So, because governments want to have more and more control of these central banks. The prime example is we go back to Japan. The new government want to have more control over the central bank, and they're now looking for a new governor. Rumours are that the current governor, who's retiring, isn't quite so keen to be going down this inflationary route and to be raising the inflation target. So I think it's, there's a report which I think we're going to discuss later on, which says that the reason governments won't be wanting to go back to sound monetary policies is because it doesn't work in their favour, and that's ultimately what it's come down to. There's no quick gains to be made when you've got sound monetary policies, and governments are there for quick gains, and central bankers are now being brought in who can help them, kind of just prop things up and pretend things are okay for, until they can find the next thing to make it look like it's okay.
Yeah. Meanwhile, Russia seems to be taking the strategy of just buying lots of gold. The same thing with China.
Yeah.
And they've said in Russia that they don't really believe anything is coming out of these G countries in terms of defending their paper currencies by just issuing more paper.
Mm-hmm.
So they could potentially be a big winner in all this. What are your thoughts on Russia?
Well, I think Russia's really interesting. You know, they're talking about changing, abandoning the petrodollar, as it were. Russia's imported more gold than China, which I think was a surprise when everyone saw the numbers come out earlier on this week. And I think we've talked about these creditor countries forming a parallel currency, and if there's gold backing that and they've got gold as a large percentage of their reserves, then that certainly loses a lot of confidence in these badly managed paper currencies in the Western world. And I think, I've talked about this before, in a paper I wrote at university, saying that this move to gold is going to be gradual. It's not going to be a sudden announcement from a government saying we're now moving to a gold standard. But I see this happening where these creditor nations who are importing gold are able to prop up their currencies with this large amount of gold.
Okay, so Jan Scoyles, amongst the currency war, the official Monetary Financial Institutions Forum, the OMFIF, they've released a report on the internationalization of the RMB. They say gold will play a vital role. So tell us about this report.
They say it will play a vital role, but this isn't exactly a suggestion that gold will be remonetized or it will return to the gold standard. They talk about China, the RMB. They want it to become an international reserve currency, an internationally traded currency, and they go through the process by which this will happen. They'll have to, obviously it'll have to happen over quite a few years. There's capital controls going on, and amongst everything else. And whilst this is happening, and as the RMB gains sort of international status and becomes a more widely exchanged currency, then gold, because it represents quite a significant part of China's dealings, will raise itself more up to the fore. And the report makes the point that it only refers to gold as an asset. It doesn't refer to it as a currency or a monetary asset. And it talks about its pros and its cons in terms of it's a good hedge against inflation, against currency wars and everything. But it doesn't see a role for it on the next standard, as it were, the next currency standard that we'll be moving on to. It just sees a bigger role for China. So it is significant, but when you read reports of this report, statements on it saying it talks about the remonetization of gold, it's not talking, like Zelig was back in 2009, 2010 about it becoming part of the basket of currencies or anything like that. It's just saying that we can't ignore gold as China come to the fore with their currency. And you have to acknowledge that East Asia, which once was a huge trading and economic power, several hundred years ago, that's happening again, and we have to acknowledge that gold will play a significant role. From a personal point of view, everything that's happening, whether it's the Chinese currency, increasing in its prominence on the international stage, or whether we're talking about currency wars and devaluation of paper currencies or fiscal policies, monetary policies, you cannot ignore thousands of years of gold being used as an international money. It's a faceless currency. And so I found this report almost quite disappointing in that whilst it does spend quite a bit of time on gold, particularly its on conclusion, it doesn't acknowledge that the gold will have a prominent role in the international monetary system on a permanent basis. It only looks at it as in a transition basis.
What about the individuals out there who are buying gold and silver? There seems to be the silver eagles in the U.S. are being sold out. People are buying gold, they're buying silver. They don't seem to be buying this idea that the paper can be solved with more paper. There's a lot of buying interest in the individual market, correct?
Yeah, and this is interesting because I'm getting a lot of questions at the moment about what's happening with gold, and the price has kind of plateaued a wee bit. We're in this kind of consolidation phase, and it's very easy to quickly point at this individual buying that's going on. The American silver eagles is fascinating. We're seeing quite a bit over Europe. These cash for gold shops are kind of they're sort of popping up again. This demand to hold individual currencies. Personally, in our company, we're seeing people are asking more questions about what's going on and how they can protect themselves. That cannot be ignored, but how significant that shift has to be in these Western countries for governments to pay attention, I really don't know. Because like you say, these Cameron and Osborne and your Mark Carneys and your Ben Bernankes, they don't want to pay attention to this, and the $1 trillion platinum coin that came up, people weren't really looking at that going, okay, well, that means that they're onto precious metals. That wasn't what it was particularly all about either. So it just shows that they're completely missing and misunderstanding the role that precious metals could do and how people are putting their faith into them.
Right. This the $1 trillion platinum coin idea was to create a bogus platinum coin with 1 gram of platinum in it, but say that it's worth $1 trillion and to swap that for $1 trillion in fiat money to keep from going over the debt ceiling. The fact, as you point out, that yes, platinum and gold and silver are mentioned in the founding documents of the United States and referred to and used as money, and maybe that might be a solution in getting away from paper. That was never in the conversation, right?
No, exactly. They kind of you saw them talk about it, and you're like, yeah, you're nearly there, and then you saw the details of it, you thought, no, this has just completely been missed. You know, they couldn't understand it, and it's like we just said before, everything is just a quick solution as how they're going to get things done, and it's just, you know, how can we do this, and then we can go and carry on doing what we were doing in the first place. And like you say, it's in the Constitution that they should be having this, and I've actually been spending a bit of time, as boring as it sounds, looking at other countries' constitutions, and it's not just the US that say that, you know, that the country should be minting gold and silver coins. And last week I wrote something on a thing called the Trial of the Picts, where it's this time-old trial that happens in the UK, whereas if the mint is found to be debasing the currency, then the head of the mint, which I believe in this country is the Chancellor of the Exchequer, could be hung, drawn and quartered. And perhaps this is maybe something that when they're coming up with ridiculous ideas like 1 trillion platinum coins, we could maybe haul back up the constitutions and laws in the UK. We don't have a constitution here. Then, you know, that's something that they would maybe suggest more sensible policies.
That's a hanging offence.
It's a hanging
even mention
offence.
that. You'd be drawn and quartered for even
Chancellor
uttering
of the
such...
Exchequer. I think just for the royal family.
Okay. Well, you know, we're big fans of this type of thing. You know, capital punishment for crimes against capital.
Well, why not?
Thanks so much for being on the Keiser Report.
Thank you.
All right, and that's going to do it for this edition of the Keiser Report with me, Max Keiser, and Stacey Herbert. I want to thank my guest, Jan Scoyles of the Real Asset Company. If you'd like to contact us, you can email us at kaiserreport@rttv.ru or tweet us at Keiser Report. Until next time, Max Keiser saying bye, y'all.